Hello, Uncle Jim here. Today I'm actually filming this video from a motel in Denver. I'm actually on a trip with my son who leaves for the Marines in August, and we're following Rocky Mountain Race Week. We're actually going along with the racers and trying to get the full feel of the experience. So today I wanted to share with you um, what I'm doing to deal with these crazy markets. A lot of my positions are underwater. I shared last month what I was trying to do with rolling. I was able to roll quite a bit of my positions, and I've been able to kind of get out of trouble. So I want to share with you how I've done that, and I also want to talk about at some point we're going to be at the bottom and we're going to have a good bounce. So I want to talk about how I'm preparing for that bounce and the steps I'm taking now to ensure that that bounce leads me in a good direction, and I can actually make some good income from my premiums. When we're coming out of the recession or the bear market and going on an upward trend. So stay tuned. I think you're going to enjoy what I have for you today. Okay, so what is the bear market bounce? In my many years of investing, typically what happens is at some point you are going to hit the bottom of the market and you get a good bounce. I believe 6 months to a year after the bottom of a bear market, it's 10 to 12% higher. So that's what I'm looking at. I'm thinking hopefully maybe this fall or late summer we're going to hit the bottom. I think where it's going to be around 30%, and we're close to that now in the Nasdaq. The S&P I think was down 20%, and I believe the Dow's 15. So we're pretty close to the bottom. No one can tell for sure. So it could, you know, today is an up day. Who knows? Maybe we already hit the bottom, or maybe it's going to be another month away, or another 2 months, or maybe another 6 months. We really don't know. So what I'm doing is trying to take most of my positions that are in the money and trying to better manage them. I had a lot of things expiring last month or this month, last week, and I've been able to move them around. I've been able to move them out into different months. I have a lot expiring in July, some expiring in August, October, December, and even into January and later, almost leaps in a sense, turn some of them into leap positions. And that's helped quite a bit. Most of those I've been able to do again with making a little bit of profit, but some I did have to take some small losses in order to move things around. And then, you have to remember it's hard to accept that some of the stocks have gone down so much. I've had some that have gone down 30, 40, 50%. And these are dividend aristocrats. These are good companies that are making good dividends. So I feel like in a lot of cases, the babies have gotten thrown out with the bathwater. And, so just because they're down so much now, you still have to realize, well, you're never going to get them at the bottom of the market. And if you try to, you're going to end up messing up. And a lot of people, do much worse. They end up buying high and selling low. So at least with options, you can get them close to the middle, or maybe not at the bottom and not at the top, but at a good price. And a lot of these are still at a good price. I'm going to actually at the end of the video talk about some of the specific positions I'm looking at. And I also wanted to mention I found it harder to actually do cash secured puts at this time. I'm doing actually harder to do credit spreads and a little bit easier to do cash secured puts. So again, it's really important to be sure you're looking at stocks you want to own versus just trying to make premium. At least for me, it's worked out better. So some of the stocks that I'm deep in the money, I'm willing to own, like Cisco and Intel and even 3M. And I've had a tougher time finding uh, puts to buy that are farther out. I usually like to do a $10 spread, and a lot of those, the actually the puts that I want to purchase are real expensive, so it's difficult to find good value. And then I'm also sticking to my strategies, and I encourage you to do the same thing. In the sense of being being sure you're taking the right amount of risk and you're looking at expirations that work with your strategy. And then also, I'm really looking at the options wheel. So a lot of these I'm happy to own. And the option wheel is a really good strategy for that. If you're not familiar with the options wheel, I do have a lot of other videos. In short, it's just selling a cash secured put owning the stock, and then once you own it, you sell a covered call, and during that whole process, it gets assigned to you, and you just keep, you know, reselling um, covered calls and cash secured puts, and you keep making premium doing it that way. And with being near the bottom of the market, it works out quite well to do that strategy. And I'll talk a little bit more about that in this next part of the video. So stay tuned. Let's jump into a spreadsheet where I'll talk about how I'm handling a lot of my future positions and how I'm looking at managing my cash, because that's really what it comes down to. I've always kept a lot of cash, and my cash has dwindled a little bit, but I still have quite a bit to be able to manage these positions. And even today, I noticed some have come up quite a bit. So let's jump into that next part of the video. Okay, I've opened up a new spreadsheet that I set up. This shows all the positions I have that are deep in the money. And I'm going to talk briefly about these, but these are some of the companies I really like. Most of these are dividend aristocrats and really good companies. And this is where I was mentioning before, yes, they're deep in the money, but who knows? We may be at the bottom, or we may be close to the bottom. And some of these are paying, like Cisco, I believe is paying 3.5% dividend, and Intel, I believe, is close to 4%. So let me go through these briefly. And the first one is Corning, and I really like Corning. Corning typically has good numbers. Like everybody else, I believe their earnings are, they're projecting to be down a little bit in later this year and possibly 23. But I do have them expiring on July 15th, and so I do need to determine what to do with them. And they're in the list that I mentioned here at the top, that stocks I want to own. So I definitely, going forward, I want to own Corning. Corning, again, pays a really good dividend. It's a dividend aristocrat and a very good company. Next is Fidelity National Financial, and it's an insurance-based company, and really they, just like with Corning, they have really good dividends. I've got a bit more time to deal with them, and I only have one contract. Now, I did roll a contract last week for them. I actually didn't roll it. I let it get assigned, and it was 100 shares. And I believe today the market's up quite a bit, and it's also up fairly good today. So Fidelity Financial is a good company to own, and I'm probably going to, depending on where it is come later this year, I'll probably let those also get assigned, because again, it's a stock I like, it's a company I like, and my guess is right now they're going to have a significant bounce and be worth a lot more than they are now. Next is Cisco. I don't know that I need to talk much about Cisco, but a great company, well managed, pays a good dividend. I do have two contracts now. I do own 200 shares. I did let 200 shares get assigned last week, which I think they were $4 to $5 in the money. I believe I paid 45, or I believe I paid 45 for them, maybe 46, and so they did get assigned to me, and I was perfectly okay. So I'm ready for both Cisco, two contracts, and Fidelity National, to be able to write cover calls for both of those. And for the next two contracts in Cisco, I'm again happy to own them, and we'll look at letting them get assigned if I can't roll them at that time, just like the ones I did just last week. Next, I've got Intel. Again, I don't need to say much. Intel, great company, good dividend. I really like what they're doing. I've mentioned this in the previous videos. They're onshoring a lot of their manufacturing. I believe they've also are trying to get the government to assist the chip makers to be able to bring a lot more chip manufacturing home. So I really like that, and I really like what they're doing and their long-term prospects. So I think Intel is a really good company to own at this point. Now the contract expires in 9/16, so I have a little time with it, and it's 3 contracts. So I may try to roll one or two of those, and one of those get assigned. I already own 400 shares of Intel, so I'm perfectly fine with owning some more. And it's not as deep in the money. I think it's $3 to $4 deep in the money, which with a big bounce, that could be not in the money anymore. So who knows? We'll see how that goes. 3M is one I've been working with recently. It's come down significantly off its highs, and it also is paying a really good dividend. And it's not too much in the money. I think it's $135 stock, and it may be $2 or $3 in the money. So I'm okay with it also getting a sign, but I'll probably be able to roll it, is what I'm thinking. And I do. This is expiring on July 15th, as you can see here. So I will need to make a decision within the next couple of weeks. But hopefully, if I can't roll it, I'll be able to let it be assigned and write covered calls on it, because it does have some great premium for covered calls. Next is Citigroup, and it I was able to roll it I believe last week. It doesn't expire till November, and I think its book value is higher than what its shares are currently going for. And again, it's a dividend aristocrat, pays a good dividend, and being I have a little bit more time, I'm less worried about it. My guess is it's going to be out of the money by the time November rolls around. So you can see I really put a lot of these in different expiration days. I believe I don't have more than two or three expiring on the same um, expiration date. I believe there's three in July and three or four in September, and then most of the others are onesies and twosies. So next we've got Ford. I've got three contracts, and I believe Ford's around $11 now, maybe between 10 and 11, and these were at 16. So I've been able to roll them quite a bit, and I've made some good premium on them, and I have till December. So my guess is Ford is also going to come back, and what they've done with the Ford Lightning and what they are currently doing, I think they're going to probably be close to being in the money again, hopefully by December. Um, and I already own some Ford, and I'm perfectly fine with owning more and letting those get assigned. Luckily, it's not real expensive Ford. A Ford would probably be a really good one to sell some options on now, mainly because it's around $11 or $12. You could probably get $10 options, and it doesn't require a whole lot of capital. So even though there's three contracts, that's less than $5,000 if they get assigned. And you're also able on the other side to be able to write some really good covered calls. So if you're looking for a good candidate for writing, for doing an options wheel for it, is probably a really good one that you can look at selling some cash secured puts on Ford, and then doing them close to the money, let them get assigned, and then sell some covered calls, and again let them get assigned, and write that, um, you know, verti- write that options wheel. It would work out quite well, being such an inexpensive stock. Next is Ben, which is Franklin Resources, and they're also a dividend aristocrat, and they also pay really good dividend and have increased it every year. They're also expiring on 7/15. That's why I have this in this lighter shade of orange. Another great company, another company you can work with, and I'm fine with owning that, or rolling it, depending on where it is at the time. It's not deep in the money or real deep in the money. I think it's $3 to $4 deep in the money. Um, but again, another great company, another one that I'm perfectly fine with owning. And when I first started selling options on it, it was considerably higher. I believe it's dropped 30-40%. So just like I mentioned with one of the other ones, I feel like it's probably been oversold at this point. LEG, Liggett and Platt, and this is a great example. They had some mixed earnings, I guess, 2 months ago, and they got hit really hard. They have recovered now since then. They're still in the money, but probably still deep in the money, but not outrageously deep. They've recovered quite a bit, and they pay again a fairly good dividend, 3 to 4%. Another good company, and they're not real expensive. I think they're in the 30s currently, like 35, 36. WBA is Walgreens. It expires on 1/20/23, so I have plenty of time to work with it. But it too is in the money, and they pay a good dividend. They're also, I believe, a dividend aristocrat. Have increased dividends a long time, so not as worried about that. And since I've got a bit more time, so next we've got iRobot. This isn't a dividend aristocrat. This is a company that I like. They make these vacuums, these robotic vacuums, and I believe they may also be making lawnmowers now. But they can do really well. They've been hit pretty hard lately with the chip issue, and supply chain stuff. So right now, I believe they're fairly in the money, but they can really move. I mean, within a day or two, they can be out of the money. So they've been in and out of the money the whole time I've owned that, and I've got till 9/16, so I've got a little bit of time to work with them. So, and they typically have really good premiums on both ends, both on the calls and the puts. So I've always been able, even if they're in the money, been able to roll them just because they have such good premium and they're cash secured put. So I do have a little more flexibility with rolling them, and it's only one contract, so it's not as big a deal as some of these others where I have potentially three contracts like in Ford or Intel. Next is MU. This is Micron, another great company. They're still having really good earnings, and they're kind of in a niche on their own. They without a doubt, I think they got hit hard the last 2 weeks, and I think they're going to have a major bounce back up. So if you're looking for something to sell some options on now, again, using the wheel strategy or just selling cash secured puts or vertical put credit spreads, Micron is a great example. I believe they're still like $8 or $9 in the money for me, but just like IRobot, they have outrageous premium on their contracts, both puts and calls. So another great candidate for rolling. And I do have to make a decision with this one. I believe this is in my planning worksheet that I just released. I believe on Sunday to my Patreon memberships. And so I have to do something with this fairly soon. So probably not this week, but most likely next week I'll need to roll it or figure out what I want to do with it. So, and then these are the stocks that I'm not sure if I want to own them. So all the ones I just mentioned are ones I definitely want to keep and I want to own them. So worst case scenario, I'm going to let them be assigned, then I'm going to sell covered calls on them. But these I'm not completely sure about. eBay has been hit really hard. They, just like Amazon, they came out with some negative earnings and they dropped big time. I think in one day they dropped 10-15%. So I haven't quite decided what I'm going to do with them. Luckily I do have a little more time. They expire in September, so hopefully they'll rebound and come back up. I believe they have dropped 60 or 70% in the last 3 months, but I do like eBay. I use eBay. I sell stuff on eBay, and I also purchase a lot of goods on eBay. So at its current price, I believe it's in the high 40s. It's another good options play if you're looking to sell some options currently. I don't think they're going to go below 40, but you never know in this market. Next, I've got Smith and Wesson. It's also expiring on 9/16, so I'll need to make a decision with it. I believe it's $7 or $8 in the money, but in another good company. So I'm leaning towards keeping and letting it be assigned. And my son, I got this idea from him, so owning it would be something that I probably would pass to him down the road. He's sitting over here probably smiling. Um, so those are the two right now that I'm not completely sure about. But I think Smith and Wesson, both of these are probably leaning on the side of letting them get assigned and owning the stock. Now, if I'm able to roll them, I may roll them. But they both have good premium. So hopefully in my next video I'll talk about what I decide with these. Now, the one I definitely do not want to keep that's really deep in the money is Big, and Big got hit really hard with some bad earnings. Um, they tanked. Now I'm probably going to have to take a loss with them. I do have a little bit of time to determine what I'm going to do with it, but right now until they recover, it's not something I would look at buying currently. So these I'm either going to take a loss. I'm definitely not going to let it get assigned, so they do have another earnings coming out in August, so maybe that'll be a better earnings. And I believe they had way too much inventory and they've been having major sales to kind of limit that, but I think they've taken some pretty big losses. So that's my positions. That's a lot of my, a good number of my positions are in the money. These are the ones that are in the money. I do have others that are out of the money, and hopefully some of these will also be out of the money once we have a recovery, maybe even today because the market's up significantly. So that's kind of what I'm looking at, and that's in a way with letting most of these be assigned. It's almost like the options wheel strategy. Actually, it is the options wheel strategy. So most of these I'll look at writing cover calls when we start coming out of the downturn, the bear market, and then I share this. I share additional information. If you want to take a look at my memberships and my Patreon memberships, they'll more details will be below. So I encourage you to take a look. And thank you for joining me. Also, please hit that subscribe button, hit that like button as well. And I hope you have a wonderful day, and I hope you're staying safe during these crazy market times. Thank you.